Hi there, welcome to the Stockscores Market Minutes for April 30th, 2012. This week's topic, interconnected markets, how the markets relate to one another. We'll go through the charts as we always do. Stockscores Canadian Active Trader Expo coming up in Toronto May 5th, Montreal May 6th. We've had great events in Calgary and Vancouver. Thanks to all of the people who attended those. They were very well attended, and we had some great information exchanged. If you would like to register for the Toronto and Montreal events, go to the address on screen, stockscores.com/expo. All right, interconnected markets. To understand the market, we have to understand its components. Each week when I do this video, I look at all the different charts that I look at because they all give us a little message about a certain aspect of the market. And then it's our job to try and figure out how all these pieces connect to one another and ultimately come up with a market prediction. Each component gives us a message, and by putting the pieces together, we can get the ability to develop an overall market outlook. So let's do that. Here is a chart of the S&P 500, which broke an upward trend line earlier in April, but it did so from a new high. And I often say here that for a true breakdown to happen, we typically see a breakdown from a falling top. Well, now we're starting to see signs that a falling top is forming. I wouldn't say it's a decisive formation of a falling top just yet, and so I'm not yet ready to say that we are entering into a bearish phase of the market, but I do think that some caution is warranted when you look at a chart like the S&P 500 ETF SPY. Chart of the TSX is actually looking better because where the US market has a falling top, the Canadian market has started to build a rising bottom. Now the Canadian market has really lagged the US market because the US dollar has held up well, and that has hurt commodity prices. Well, now we're starting to see the US dollar fall lower as the US economy maybe is getting some slowdown. If the US dollar falls lower, then that should help commodity prices, which will help the Canadian market. So we could be in the early stages of an upward trend. Now there's really no fear in the market, so concerns about what is happening in Europe haven't really caught the radar of investors yet. I mean, certainly there's a lot of headlines that we see about problems in Europe, but the market isn't really that concerned about it just yet, at least in terms of a major breakdown in the market. And so the VIX continues to sort of hover near its lows. If it breaks that downward trend line that I've drawn in red, well, then we have to reevaluate that aspect of the market. But right now it still looks okay. It is interesting to see, however, that money is still back into the protection of Treasuries in the US. We see some rising bottoms on this chart over the last little while. It had broken down and it's made a pretty good comeback. And so that implies that maybe some money is looking for some protection. When you look at the US dollar, we see that it is in a bearish pattern. However, it is at support. And so the US dollar should bounce here. But if it breaks down through that green line, it really implies that the market is looking toward further quantitative easing. Now this Friday a key number will come out. It is the employment number in the United States, and if that employment number isn't great, if we start to see more economic numbers showing that the recovery in the US is slowing, then it increases the chance of quantitative easing by the US Federal Reserve, which is bad for the US dollar, and that could cause a breakdown through the green line. We still don't have that message, but certainly the market is beginning to look toward that. And this is evidenced also by what's happening in gold, which is starting to form some rising bottoms. And we had a good recovery today in gold from weakness in the morning to close near its high of the day. And this is another important chart to keep an eye on. Again, if the US government starts printing more money, you'll see money come back into gold, money go back into treasuries, US dollar decline, sending commodities higher. Now the oil market has stabilized. It kind of fell off in recent weeks because it appeared that political issues in Iran weren't as bad or as potentially bad as what the market had thought, and so we saw that market slow down. But now with the US dollar falling lower, it helps commodity prices, including oil, and I think that's why we've gotten some stability in oil prices. So I think that the market right now is a very difficult one to call. It is starting to look toward the potential for quantitative easing. We see that in the US dollar weakness, we see that in strength in gold and treasuries, and we see that in some improvement in the Canadian market. I am neutral on all markets right now. I think that they're very quiet, and the next big break will tell us what's going to happen. And so we got to watch for that big abnormal day, either up or down, as our cue of what is going to happen in this market. Right now, I believe that caution should still be taken with stocks. You need to trade individual names, those stocks trading on their own story, but that trend of a lower dollar and higher commodity prices may be developing. Right now, it's still very speculative and in its early stages. Once again, to register for the skate in Toronto and Montreal, go to stockscores.com/expo. Have a great week in the market and trade well.